Welcome to Rich Keys Trading Channel, where we unlock one candle at a time. Please pay attention to the disclaimer on your screen. And with that out of the way, let's get into the charts. Welcome back to Rich Keys Trading Channel. Today is Sunday, the 1st of February 2026. And I just want to present my analysis that I've done. It's the end of the month, and I'll be looking at the monthly chart, the weekly, daily, and we look at the hourly and the 4 hours to kind of form our weekly bias for trading. All right, I'd like to start off today's analysis with the dollar index, and I'm starting a dollar index on a higher, very high time frame because I want to show you something. I think the dollar index has come to an area of support, and I'll show you why I think it's an area of support. Now, back in 2018, we found support here. We pulled back down, formed another support right here. And then we have now come to this level, and I'm thinking this level is another area of support. And why do I think these are areas of support? Is because when I look at my cycles, where's my stochastic cycle? Right about here. Okay. So this was 2018 cycle low. We had a 2020 cycle low. All right. And now we have a 2026 cycle low, where stochastic is way oversold, somewhere around the 12, 0.75 level. This is a really low level for stochastics to stay. Now, of course, this doesn't mean that, it can grind out here. So we'll have to kind of investigate a little bit more to see where this will be going. So that's the first premise that I want to paint. Now, of course, if you look at your MACD is giving us no signals yet. We are not out of the woods yet. It's still bearish on the MACD signal. Momentum is still strongly to the downside. But at an area of support, MACD is not very helpful unless you see a divergence. And obviously, we don't have a divergence on MACD at the moment. So I'm not calling for an all-time move up on the dollar. I'm just saying we have come to an area of interest, an area of support, and we need to drill a little bit deeper to see what is happening here. Now, a few other things that I've observed also here is that this is a strong trend line that goes all the way back, probably comes all the way back to 2014. I just decided to cut off the trend line from here, but it goes all the way back to 2014, and we've broken that trend line, but we are also closing below that trend line. That's a concern. However, I'm just seeing support at this level where we're getting a wick from here into back into the trend line area. That's pretty much what we can infer from this high time frame, and it's a 3 month time frame that I'm looking at. So let's go to the monthly chart and let's see what the monthly chart is looking like. So the monthly chart, what I'm observing is that number one, it's more like a triple bottom area. All right, you can see wicks from here several times ever since the decline started earlier in the year of 2025. When we came here, we found support. We came here, we found support. We bounced up, and we have literally slashed through here. And look at the response. Strong support, bouncing us back above this support area. The other thing I'm also observing is a divergence between this low and this low. Okay, so this is a previous low as fallen, and we came to make a lower low, but most of my indicators are showing a higher MACD. As you can see, MACD is showing a higher low here, so there's divergence on MACD. RSI is also kind of showing the same thing. The only difference is that the month is not ended, so you can't really say the divergence is confirmed, because until next month's candle print, this can probably continue its way down. But give or take, we still do have a pre-divergence in place on the monthly chart. Um, so that's about all that I think the monthly chart is telling us at the moment, that there is an area of support where aggressive buyers have stepped in and pushed price off, you know, uh, the fall back above the triple support zone, and we have closed above it. So that's important. The closing is very important. So for now, this is the area of support that we have to mark on our chart. Okay, until we break below this, I would assume that the dollar index is probably trying to do a reversal or at least a retracement, one of them. Now let's go to the weekly chart. And on the weekly chart, you can see this beautiful hammer that has been formed. Since we formed this hammer below this support that I was showing you, this tells me it's a shakeout or it's a spring. Okay, basically all the stop losses that were below this support area has been cleared, and I think price is making its way up with this strong hammer long wick. This suggests to me that in the next coming week, the Dow index is going to push higher. How high it will push, we will determine that. But from my initial analysis, I think the Dow index is poised to at least rise up to about 97.785, somewhere around this level, which is exactly to the trend line that I was showing you on the higher time frame. So I expect us to come test some part of this trend line, and potentially this whole move from here to here is a fair value gap, and I expect some part of this fair value gap to be closed. So I expect price in the next coming weeks uh, of the Dow index to kind of make its way at least to the 97.9 area, or possibly would even push higher to about 98. But we'll follow the chart on a daily time frame and see where that would lead us to. Stepping into the daily chart, just to confirm what we are seeing, this gap or imbalance that is created is definitely going to be filled when the week opens. Trading session opens sometime, today into Monday. I would expect this gap to be filled. And like I said, my target zone, initial target zone, again, here was the previous support. That now that turns into a resistance. So my initial target is somewhere around this area here. And once we get here and we're able to kind of contend those that are defending this place, then obviously, yes, we could be looking for about the 98 target, which is somewhere around this area, which is the 200 EMA on the daily chart. So that's about all that I want to share on the dollar index. I think in the coming week, you should be looking for longs rather than shorts based on the support from the very high time frame, as well as the imbalances that is likely to be filled in the next coming week. The next asset I would like to look at would be Bitcoin. All right, and this is a higher time frame chart of Bitcoin as well. This again is a 3-month chart I'm looking at. So in the past month, we came to find support of the 9 EMA on the 3-month chart, and we bounced off of it. We opened a little higher, and then we did a 3.28 retrace towards the last 3 months candle, and we have had a rejection from there, closing now at the end of the month, below our 9-day period moving average on this 3-month chart. Now, I think this is very significant because, as you could see, ever since we crossed up to this blue line here, which is the 9 EMA that I'm using, we price stayed above it despite all the volatility, the news, and everything. We stayed strongly above it. But now we have clearly broken this. Now, the break of this and the closing below this is very important. However, this again is a 3-month chart, and therefore we got two months to kind of decide whether this closing is for sure. All right. So that's about all that I want to show you on the 3 months time frame, which is a much higher time frame. Indicators wise, the 3 months time frame is also showing that we are in a bear camp. MACD, my MACD is already ticked below, signaling that the move down is pretty strong and intense. Our stochastic cycle is already cycle high with a divergence turning down. We haven't hit a cycle low yet, so I'm not expecting any reversals from this level on this time frame. One of my new indicators that I have custom built, and I don't mind sharing it, you can find it on TradingView, is this Delta EMA chart that I'm using. And as you can see, Delta EMA chart is showing that we're still grinding lower. Now, of course, the cross of the zero line is very important, and we haven't crossed it yet. So for those that are still bullish, there is hope for you. But for me, considering the divergence here, as well as the momentum to the downside, tells me I'd rather be looking for downside target rather than upside target. Now, this is regular RSI indicator that I'm using here, and also showed you the bearish divergence, and then down we are coming. We have come to an important level also on the RSI. We are the 50% level, and this is an area of contention for sure, you know, so I expect a little bit of a battle to happen here. However, when we go to the lower time frame, you realize that the battle is already in the bears camp, and that is where I would like us to go to next, which is mostly the monthly chart. So looking at the monthly chart, you would observe also that whilst in the previous month we were holding pretty strongly to the 21 EMA, okay, on the monthly chart, clearly we have broken that 21 EMA. We closed below the 21 EMA, and now this is where we are as the 1st of February has started. I don't expect us to go above this 200, this 21 EMA on the monthly chart. And so any, minor bounces that we get is to me noise. The greater reward is to the downside. And, from my analysis that I've done, I think Bitcoin probably would make it to at least somewhere around the 69 level first, because it's an area of support. So that is where I'm looking for price to come find support. And then when we get here, we'll reassess. But based on structure that I've done and analysis that I've done, I think Bitcoin is going much lower. But we'll take it month by month, week after week, and we see when we get there. But the ballpark target that I'm looking at now is somewhere around this level here, which is around 52,000. And potentially we might make it all the way down to about 35,000. But I would present those pathways as weeks and months unfold. It's too early for me to conclude that we come into 35,000, but I just want to put it out there that it's on the charts. 35,000 is on the charts. All right. So that's my bias on Bitcoin. Going to the weekly chart. The weekly chart is also giving us the cement ceiling, which is right at the 100 EMA that I have here. So we held this EMA for a long time. I mean, literally for almost 10 weeks. We held above this EMA, and clearly this week we have kind of broken this support. So now this support, which is somewhere around 86,700, will become our ceiling, our resistance. So for any move that you think might whip you up, this is where you're gonna invalidate your short. But other than that, I'm very bearish on Bitcoin. I think Bitcoin would make it to the 69th target that we talked about. If you go to the daily chart, now, of course, going back to the weekly, let me just quickly share this on the weekly. So on the weekly, yes, one would say there is some divergence between here and here, and I do not disagree. There is a divergence. Okay, look at your MACD. So this was your previous low MACD. You have made a lower low MACD is here. However, I always like that. However, you always want to look at cycles. We have a cycle that is turned down. We haven't hit a cycle low yet. Now that gives me confidence that whilst there is a divergence, the divergence is probably going to produce a very shallow retrace. And so, yes, I do expect a retrace from this level. Bottom pickers are stepping in thinking it's cheap. However, this is also telling me that that will be short-lived. It will be a very shallow pullback. So I'm not interested in that shallow pullback. I'll let it play out. But I'll be looking for um, the higher time frame reward, which is much lower. The other thing that I also want to share is this custom indicator that I just talked about. Okay, it's a very powerful indicator that does not disappoint. All right. So usually, what one of the things that this indicator would tell you is once you come below and you go back to test the zero line and you are not able to break the zero line, remember the zero line is the equilibrium between bears and bulls. Okay, so if the bulls are not able to break this zero line and we start selling off, I don't have hope that we're going up at all. And so I think based also on my custom indicator, I think Bitcoin is going much lower. Of course, RSI is here, and RSI might be giving us the divergence that we're talking about. But even with RS, yeah, RSI will be giving us the divergence that we're talking about. With this divergence, it's still not confirmed yet, even until next week. So depends on the candle that we form next week, that would confirm that divergence. But yes, I do recognize the divergence on the RSI. That's what I was talking about. That it might give us a shallow rebound or mini rally, but I don't expect it to kind of go break this 100 EMA, which is the support that it just broke, and go back up, to maybe over 90,000. Or I don't think so. I have doubts on that. So that's my perspective and view on Bitcoin. I guess this is where I'll conclude Bitcoin analysis. I'll look at the equities, look at gold, silver, and we shall wrap up our analysis for the week. All right, and this is a weekly chart of the NASDAQ 100. I'd like to briefly look at the monthly chart before we come to the weekly, see what the monthly is doing. So on the monthly chart, clearly we could see that ever since we formed this hanging man here, we closed below it, confirming this hanging man. We haven't been able to go above the high of this hanging man on the monthly chart. Now this, as I'm looking at, is a distribution resistance zone, because obviously there's a lot of effort, and I'll show you once we get to the weekly chart. There's a lot of effort here. In other words, if you look at these volume bars here, these are not small volumes. So there's a lot of huge volumes, but price is going nowhere, which means there's a lot of limit sell orders right here that are absorbing every buy order that comes in. All right. So I do see the distribution on the monthly chart. I also look at the monthly indicators, and the indicators doesn't suggest necessarily that we collapsing down, other than the fact that we hit our high in October, and pretty much RSI has been declining. We've gone to test the all-time high right here at this level, and our RSI is just right here on the monthly chart. So again, this is not confirmed as a divergence, but it's showing that there's weakness or there's no strength with all the buying that is pushing price into the resistance. In terms of our indicator, we already crossed down on our cycle, and we're just somewhere still in the positive territory. But once we cross down, the most two things that happen is that you're going to keep coming down until you either get to the 50% level, or you might make it all the way down to the low level of about 20%. I mean, at the 20 level. For now, this is telling me that there's weakness to the upside, and the strength, or the downside has more potential than an upside move. If you look at your MACD also tells you that momentum is drying up on the monthly chart. Okay, so for the last 3 months, momentum has been drying out pretty much. There's no strength for the move to the upside. Now going to the weekly chart, where we form our buyers, and based on this weekly chart, way back somewhere around November, December, we already concluded that once we get our crossover from our MACD, we stay bearish until this crosses back up. And I think I'm still in that camp. I'm still bearish because, until MACD gives me a signal on the weekly, I think this is still going to go bad. So that's about that you can infer from in the indicators. Now, one good thing is, like I was showing you, if you look at your weekly, this is the custom indicator that I'm talking about, which is the delta moving average, right? So delta moving average is a volume momentum indicator, and it measures pretty much buyers and sellers volume, and it plots the difference between the buyers and sellers. So definitely this looks, there is a lot of effort. In other words, buyers are really stepping in. The fact that we are above zero, the line is green, that means there's a lot of buying pressure, right? But then, with all the buying pressure, you should expect to see price move further. So for those that are familiar with Elliott wave, not Elliott wave, but Wyckoff's theory, effort must be equal to result. And here we see a lot of effort, but there's no result. Price is just stuck right here. And whenever you see that happening, the first thing that you want to be suspicious of is that somebody is selling aggressively into the aggressive buying. And at some point, one of them is going to emerge as the winner. But as I was saying, looking at all the other things that we just, the indicators that we looked at, I think, the selling pressure is strong into a resistance here, and more likely would bring us down on the NASDAQ 100. If you go to the daily chart, you can see the reversal happening live. Okay, so we had a strong sell. I think this was on Thursday. Yes, on Thursday, you had a strong sell forming a double top as on top of it, so we hit a double top, and then a strong sell has begun. With this double top in place, I think already the market is saying that the Nasdaq is about to do a pullback rather than break through this resistance into the next target, which is somewhere around 28,000. Now, doesn't mean it's a collapse and that we may not be able to find a support and go back up. That's not what I'm saying at all. I'm just saying this is going to give us a retrace down. And after the retrace down, hopefully we might get a support somewhere. I don't know whether the support will be here or lower. But once we get our support, we can move back up. And who knows, we might do a 382 retrace or we might do a breakout. But we would analyze that when we get there. I think that's about all that I want to share on the Nasdaq 100. Let me look at the XPX 500 if the story is any different. So the XPX 500 is actually in a better place than the Nasdaq 100. Obviously, we're able to close above the last 3 months closing, and that is positive for the XPX. Um, the bad news is we're still into a resistance. We haven't been able to close above the resistance. And so, whilst it looks better than the NASDAQ, it's still very bearish, in my opinion, as it's topping out. And the pattern that it is printing is actually more a dangerous pattern because that's a rising wedge. And you know that with the rising wedge, all it takes is for us to break the lower bottom line here. And once we break this lower bottom line, yeah, we'll be falling big time. But for now, nothing here suggests that, it can go slightly up to either break this resistance trend line that I put here or not. If you go to the weekly chart, okay, so the weekly chart again confirms that since we got this candle that I was talking about, a few months ago, we haven't really grind much higher. Prices pretty much stayed somewhere around right here, poked slightly above it. And I think there's another form of distribution happening in this triangle right here. And once we exit this triangle, the lower target is very, 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 very big. I think we might be coming all the way down. Where is it? Might be coming all the way down, probably to retest this all-time high of 6,000. So that's about all that I think I want to share with the public on the XPX 500. Be careful with the move up as it's kind of looking like it's topping out, similar to what we had here. Okay, so here too we're grinding, grinding, grinding. Then we came down, did a little bit of grinding, 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 formed a double top after a slight top, and then down we came. So be careful with the XPS 500. Let's quickly look at gold and silver to wrap up our analysis. All right, and finally, let's look at gold and silver to wrap up. And this is a weekly chart of gold. Now, quickly look at the monthly, and the monthly is still bullish. We closed with the monthly candle was green. We did hit a very important level, which I had already marked on my chart a long while ago, and that was the Fib extension of 2.618, and we smashed right straight through it. Now, of course, is this the end of gold? I don't know. I'm not sure. I can't really predict that. All I can say is that it's overstretched, and more likely a pullback is what all that is happening. How far the pullback would be? Let's go down and look at our weekly chart, and maybe our weekly chart may give us a clue. But obviously, gold has been on a tear and it's still looking bullish on the monthly. As you can see, this is my monthly EMA for the delta, and it's still strongly up. So the monthly doesn't tell me anything other than the fact that there is rejection from the Fib level, which pretty much I can see as profit taking. So that's about all that there is on the monthly chart. On the weekly, We get the red candle here with a strong rejection above this 5,000 level. And if you go down and look at your weekly indicators, you would also realize that we've been having a divergence forming. Usually, three divergences tells me that RSI would make its way towards the 50% level before we get our next move to the upside. So, I don't expect us to rally, back up above that candle anytime soon. I still expect us to kind of continue our move down at least until RSI gets to about what the 50-55% range. If you look back in history, the same thing occurred right here when we had our divergence here. We came down, we went up, we formed two. It was three, always a peak of three. And the number three is always significant in technical analysis for some reason, So you get your peak one, peak two, peak three, and I think this is going to probably bring us down quite significantly to a support level. How far this support level would be, um, I'll probably say the 21 EMA has always been a good support area for gold. And previously, I was looking for gold to retrace to this level to buy, but it didn't get there, and we rallied all the way up to the Fib extension. I didn't chase it, and so this crash did not affect me. But for those that braved it, I hope you took your money off the table quickly enough. But I would expect gold to make its way back to at least about the 4,500 range support, and then we see what RSI looks like once we get there, whether we're going to continue our way down or we'll mark that area and make it to the 4,200, which is the 21 EMA on the weekly time frame. So gold is one that I wouldn't call buy here. Obviously profit taking is happening. I wouldn't want to, encourage that, okay, buy the dip. This is not the kind of dip that you want to buy. You want to buy a dip, buy the dip at a support. And right now, this is not a support. Your support area will be somewhere around 4,400 and maybe 4,500 to 4,600, and you get another support around 42, 47. You might get a support somewhere around 3,000. At least buy at a good place. I'm not saying that gold can go up again. I'm just saying, if you want to buy at a dip on this sell-off, then wait for it to get to a support level and buy. If you go to the daily chart on gold, we're currently hitting the 21 EMA, but this is a very strong selling candle. 21 EMA here is finding some people buying. As I was saying, people will buy the dip. But again, buying this kind of dip, you might find yourself buying the falling knife. And so be careful with buying gold at this level. Um, Look at silver next, and then we can conclude our analysis for the weekend. All right, so finally, this is the chart, the monthly chart for silver. And silver, I must accept that it broke all my levels. At some point, I couldn't analyze it anymore because it had gone beyond all my targets, and I wasn't sure how far it was going to keep going. But obviously, this move down is pretty big. All the way from 121 to 85 is a pretty big drop. But yeah, I think based on the pullback on silver, silver potentially could still go up when it finds support. The question is, where is the support? On the monthly time frame, I don't see anything here that suggests that silver cannot go keep going up. All my indicators are still shooting to the sky. Delta is still up. It's not even showing any signs of turning around. Wow, look at it all the way down up here, about what, 3,826 million. Wow, that's about how much people are buying into silver. So yes, based on the monthly, there's nothing here that suggests that it can keep going higher. MACD on the monthly is still up. And unlike gold, where we have multiple divergences, silver on the monthly time frame is just way overboard. Like, we had 98 on the RSI. That is super high. Thank you for unlocking market insights and trade ideas with us. One candle changed everything today. We hope you can already see how today's analysis can transform your trading and investing decisions. If today's breakdown helped you spot opportunities or potential risk you would have missed, consider subscribing to the channel so you never miss an important opportunity or avoid a potential risk. Kindly give the video your support with a like and comment below with your insights. Share the video with a trader or investor you care about. They will thank you when it saves them from a bad trade or a missed investment opportunity. Until the next presentation, keep unlocking profits one candle at a time. Thank you.